Welcome to Module 4, Adjustments to Income. By the end of this module, you will be able to understand how adjusted gross income affects any tax liability/refund on the Form 1040, understand and calculate the Educator expense deduction, understand and calculate the penalty on early withdrawal of savings deduction, understand and calculate the alimony paid deduction, and finally, understand and calculate the student loan interest deduction. So, in this module, we'll cover adjusted gross income, Educator expense deduction, penalty on early withdrawal of savings deduction, alimony paid deduction, student loan and interest deduction, and finally, we'll end with a knowledge check. So, let us cover adjusted gross income. Adjustments are deductions that decrease a taxpayer's gross income. Total income minus adjustments equals total adjusted gross income. Any increases to adjustments will ultimately lower taxable income and reduce income tax. Note that adjustments do not lower other taxes, such as the self-employment tax. You can see here on line 7 of the Form 1040 where the adjusted gross income will go. Adjustments are reported on line 23 to 36 of Form 1040, Schedule 1, and deducted on Form 1040, page 2. Adjusted gross income dollar for dollar. For example, if a taxpayer has $20,000 in gross income, $250 in Educator expense deductions, $50 in penalty on early withdrawal of savings deductions, $2,000 in alimony paid deductions, and $1,000 in student loan interest deductions, what is the taxpayer's AGI? To get this answer, we'll take the gross income, $20,000, and record to adjustments, which is $3,300, and then the adjusted gross income, or AGI, is $16,700. Next, we'll cover the Educator expense adjustments. An eligible educator is allowed to deduct up to $250 if they're single, or $500 if they're married filing joint if both spouses are eligible educators, as adjustments to income. An eligible educator is a kindergarten through 12th grade teacher, instructor, counselor, principal, or aide in a school for at least 900 hours during the school year. Expenses must be qualified in order to take the adjustments to income. Qualified expenses include ordinary and necessary expenses purchased, such as books, equipment, supplies, and other materials. Expenses do not have to be required in order to be considered necessary. Homeschool expenses are not considered qualified expenses. Qualified expenses must be reduced by the interest on Series EE and 1 U.S. savings bonds that you exclude from income because you pay qualified higher education expenses. Any distribution from a qualified state tuition program that you exclude from income, any tax-free withdrawals from your Coverdell education savings accounts, any reimbursements that you receive for expenses that aren't reported to you as wages on your W-2. For example, the taxpayer has $200 worth of qualified educator expenses. Throughout the school year, $50 was reimbursed for the art supplies the taxpayer needed to teach her class. What amount can the eligible educator include as an educator expense deduction? For this answer, it's simply $150. 200 minus 50 is deductible as an adjustment to income from the taxpayer's Form 1040, Schedule 1. So, next we'll cover the penalty on early withdrawal of savings deduction. The taxpayer may have paid a penalty for an early withdrawal of their savings, usually a certificate of deposit or CD. This penalty can be identified on Form 1099 INT Box 2 or Form 1099 OID Box 2. The taxpayer will receive these forms from their bank. Make sure to only deduct the amount on Box 2 of either Form 1099 INT or Form 1099 OID issued by the taxpayer's bank. For example, the taxpayer says they have about $100 early withdrawal penalty from their bank. After asking them if they have their Form 1099 INT, they give you their paperwork. Box 2 lists $75. How much is deductible as an adjustment to income? The answer is $75 is deductible as a 4 AGI expense. Tax preparers can only utilize the amount listed in Box 2 of the taxpayer's Form 1099 INT or 1099 OID. The $75 is a 4 AGI deduction and is written on line 30 of the taxpayer's Form 1040 Schedule 1. Note, the information from the bank may look more like a letter than a Form 1099 INT. Always remember, when in doubt, talk to the taxpayer. So next we're going to cover alimony paid deductions. Alimony paid to a divorced spouse is deductible as an adjustment to income that reduces AGI. Note, for the future, alimony may not be deductible for any divorce decree executed or modified after 2018. So requirements for payment for alimony paid include the ex-spouses do not file married filing jointly. The payment was in cash, which includes checks and money orders. The divorce does not designate the payment as not alimony. The ex-spouses were not members of the same household when the payment was made. The alimony payment was designated in a divorce or separation document and ordered by a judge. There is no liability to continue alimony payments after the death of the spouse that receives the payment. The payment is not treated as child support or property settlement. Alimony paid is reported on the taxpayer's Form 1040, Schedule 1, line 31A. The taxpayer must also have a social security number of ex-spouse they are making the payments to. This is reported on Form 1040, Schedule 1, line 31B. For example, a taxpayer made alimony payments totaling $2,500 in the past year. They also have made child support payments totaling $1,000 in the past year. How much can the taxpayer deduct as a 4 AGI deduction? The answer is $2,500. Child support payments are not considered 4 AGI deductions. Next, we'll cover student loan interest deductions. Interest on qualified student loans can be deducted up to $2,500 for the year in which the taxpayer paid interest. A qualified student loan is one taken out to cover qualified expenses for either the taxpayer's spouse, or the taxpayer's dependent. Qualified expenses include tuition fees that the eligible education institute requires for enrollment, course-related expenses such as fees, textbooks, school supplies, and equipment. Non-qualified expenses include room and board, research, travel, insurance, medical expenses, personal living or family expenses. According to IRS topic number 456, the taxpayer can only claim the deduction if the following apply. The taxpayer paid interest on a qualified student loan in the current tax year. The taxpayer is legally obligated to pay interest on a qualified student loan. The taxpayer's filing status isn't married filing separately. The taxpayer or the taxpayer's spouse, if filing jointly, can't be claimed as dependents on someone else's return. And finally, the student must have qualified as a taxpayer's dependent at the time the taxpayer borrowed the money. If all of these conditions are met, the taxpayer can claim up to $2,500, which is reported on line 33 of the Form 1040, Schedule 1. Here's an example. The taxpayer has $1,500 in student loan interest paid on a qualified student loan for qualified expenses. The taxpayer can be claimed as the dependent on his parents' Form 1040. How much can the taxpayer claim as an adjustment? $0. The taxpayer cannot claim student loan interest deduction if they are claimed as a dependent on someone else's taxes. Here are some additional resources. Adjusted gross income definition as laid out by the IRS. IRS topic 458, which covers educator expense deductions. A penalty on early withdrawals of savings, which is an IRS invited case study. An alimony paid deduction, which is IRS topic 452. And IRS topic 456, student loan interest deduction. Up next, we'll be covering Module 5, deductions.